All right. Welcome back to the Economics of Real Estate. I'm Dylan Silbernagel. That's my partner, Matthew Gizzie. This is the show where we break down everything that's happened in the GTA housing market. And in this video today, we are going to be talking about what happened in the month of January now that we've entered 2026. Matt, how are you doing today?
I'm good, buddy. I'm good. I'm sick and tired of the cold. We've had quite a brutal last couple weeks. I didn't get to enjoy the full brutalness of it, I guess, as I was out of town, but it was quite cold. And, I think there's some factor of that kind of played into the market a bit.
Yeah, that's a great point. When it is that cold, people do not want to go out, and that's just kind of a reality of it. And we've seen that before where all of a sudden the weather turns and we can see the little pickups, the little spikes in the market. So, I wish we could blame the market on just the weather. Unfortunately, that's not how it works, but there's no doubt that it does play a factor.
Absolutely.
Honestly, even when I go to pick up the kids at school these days, that cold wind, it feels like it's just slicing my face. It just hurts. The air is hurting my face is where we're at. Well, welcome back to Canada. We kept it nice and cold for you. Let's jump into what we saw there in the month of January. And so this is just overall on the Toronto board. And I think it's always great to reflect back, of course, year over year. Where are we this January in comparison to where we were last January? And when we take a look at, let's talk about the sales category first there, Matt. Just taking a look at the change in sales specifically through our detached semis, towns, and condos there. Do you want to walk us through that just for a moment?
Yeah, so when we're looking at sales for the 416, year over year, detached down 16.4%, semis down 25%, townhomes down 22.6%, and condos down 23.6%. So definitely some big numbers out last month of just how slow it was for January as compared to last year. Last January was super slow. We couldn't believe how slow it was. And, we've blown that out of the water quite a bit here. Now, again, it'll be interesting to see how February reacts now that that cold snap's gone, because I don't think we had something like that last year where it was so cold. And also the snow. We've had so much snow this year too, it feels like. So it really feels like a lot of people have just stayed indoors. And no, I'm not going to say that's the full reason of why we're seeing this data out there, but I think it had an effect of getting it up to these types of numbers. And then we're looking at the detached or the sales in the 905. We're looking at down 12.8% for detached, down 15.7% year over year for semis. Towns down almost 24%, and condo apartments down 30.3%, which is quite massive.
It's interesting to see the condo market in the 905 struggling more sales volume wise than what we saw in the 416 even, where predominantly we've seen that extended bit of inventory hitting. So that's interesting to see nonetheless. And when we jump over from that condo side and we take a look at the pricing hit, they were hit hard there as well in comparison to what we saw in the GTA, down 13% compared to down 8.6 when we look at the condos. This is now specifically average price.
14.5 was a big number.
Yeah, the semis at 14.5% down. Detached down 8.8% year over year. Towns down 10.1. I was looking at a couple other areas specifically for some clients last week, and that, those towns being down 10%, it's ringing pretty accurate for certain pockets as well. I was looking around Pickering, down 11.5% there in terms of towns. They're detached, I think we're down 13.3, so maybe a little bit bigger of a hit there than what we've seen overall. But of course, for those ones, I'm looking at median price. I'm not letting the averages sway too much. But nonetheless, that's where we're sitting. And I think the big impact, like you talked about, the pricing adjustment, it hasn't stabilized as much as I think we would have expected when all the changes first started happening. We expected by now for it to be a little bit more of a minor fluctuation, but on a year over year basis to be down that 10%, 14.5% in terms of the semis, it's greater than I think we had anticipated, 24 months ago.
Yeah, for sure. But at the same time, I think a lot of people thought that potentially the rates would would come down a little bit further down from where they are now, especially the bond market. But it's quite clear now that rates are going to stay higher for longer.
Mm-hmm.
And a lot of that has to do with just inflation and the amount of money that's being kind of printed by governments to pump up infrastructure projects and stuff like that. So I think that kind of stickiness in inflation and the deficits that governments are running are factoring into that.
Yeah, that makes sense. And we're doing a separate video this month on where we're at with the rates, some of the predictions that we've been seeing from the major banks. We'll see what that looks like. Not what we would have anticipated, 14, 18 months ago in terms of where this outlook is now. Let's jump right into York Region and the freehold market, where we saw a decline even on a month-to-month basis going from December to January. We're down 4% in terms of median price, transaction volume down 13.3%, median days on market staying exactly the same at 36, termination volume in January quite low, and only down a little bit. So that's great to see, not more terminations in January. Not what you would expect to see anyway. January is typically a relist versus a cancellation month anyway. And then when we look year over year, I'll get my mouse up here. We look year over year in terms of the median price in the freehold market, down right around that 10%, 9.2. So we're a little bit lower there. And transaction volume, surprisingly here, only down 5.8% as we look at these freeholds in York. Coming into our chart, as we compare back to 2011, you can see our starting dot here for January. A little higher than most in terms of new listing activity, but not the highest, which is great to see because we did have a fair bit of terminations at the end of the year. And we'll see that decline in active listings as we move through. But still elevated new listings in general. When we come into the active listings, here's where we see that stack up because we haven't seen the sales volume happening. And so we're looking at 2,382 active listings, which is our second highest compared to 2018 was the only one that beat us out for January's in terms of active listings. What this means for you as a buyer means you have a lot of choice, and that choice typically brings you negotiating power, puts a little downward pressure on prices. What this means for you if you're a seller is you got to be bang on with your pricing. You got to make sure that you're standing out because buyers have so much to choose from right now in comparison to previous markets and definitely the last time that you sold. When we take a look at the composition of those homes, we're currently sitting at 78% of the homes on the market in January were detached homes, which is down if we compare back to January in 2023 that was sitting at 84%. And we're seeing more of a surge here in what's making that up is in terms of our townhome market, which, Matt, as you and I were talking about before the show, that's kind of where we're seeing some of the sales volume happening right now in different pockets. As we come to overall sales for freehold market here in York Region, it did come in at the lowest we've had for the start of a year at 403 units. 2018, 2019, probably the last times we saw that close to that low at 427 units in 2019. And then really the next lowest was 2025 at 428. And here's our median sale price. We are drifting lower towards no man's land in terms of getting closer to that 2020 number, but hovering just below kind of what our 2021s were. 2021 median price being $1,250,000. We're now coming in under that at $1,180,000 across all those freeholds. And so for those, just so you guys know, we are looking at detached semis and towns combined. And then as we roll into our months of inventory, we have set another high again, up to 5.96 months worth of inventory. So again, lots of choice there for buyers. Great time to get a good deal on the house. You got great negotiating power. Have your conditions in your offer. Don't worry about competing. Although, Matt, I will say I did see a post from Sandra Jackson showing an uptick in home selling at asking and above. So interesting to see that strategy may be the way that we're creating urgency to get buyers off the fence.
Well, it works. And I saw a property actually yesterday in the Newmarket area that was listed for around $1,888,000, and it sold for just below $2 million. But The issue is it was originally listed at 2.4, 2.5 million about a year ago, and it's finally come down to the point where, they're at $2 million. Yeah, they priced it low to get someone off the to get people off the sidelines.
Mhm.
But for me, in this type of market, seeing an elevated number in over asking or at asking is just, it's not a sign to me that things are picking up or prices are moving in the right direction. It's more so just like you said, it's getting some buyers off the sidelines because they think they're getting a
Yeah.
great deal. Maybe I don't know.
Yeah, I'd say that ultimately those now it creates a little bit of urgency because you got a set offer date that somebody else might come and buy it by,
Yeah,
right? So, like you said, this isn't a sign that the market's turning around or that people are going to be spending more than what market value is. As you talked about on that one, still sold at a loss compared to when they purchased in 2021, I think it was. So yeah, or actually these go if it's the same listing I think we're talking about, they might have been even a 2024 purchase or a 2023 purchase.
yeah. I think someone bought this property for 1.4 million, sold it 4 years later for 2.4 million, made $1 million off of it, and then the
Yeah.
individual that bought it in 2024 or 2025 is now let it go for almost four hundred
For
thousand dollars
400
less.
less than what they paid for it. Yeah. I think that was like a 2020 purchase, then a 2024 sale, and then here
Yep,
they are. Yeah.
and then here they
Yeah,
are. Yep.
that's a
And
tough
and to
one.
be fair, for the York region area, the a percentage of above listing price sales are actually down 61.1% from last
There you
year.
go. Yeah.
So I think she was talking about probably in the Toronto area,
Mhm.
that it is having some type of an effect, at least getting buyers off the sidelines.
Yeah, agreed. All right, Matt, talk to me a little bit about what we're seeing in York regions, particularly the condo market.
Yeah, so when we're looking at the median price from December to January, we're down 5.7%. Condos are getting no relief. They seem to only be getting worse as we go along. Um, when we look at the median price year over year, we're down 11.1%.
Mhm.
Transactions month over month down 4.5%. Year over year down 22.5%. New listings volume actually was quite a bit here. We went up 87.3% from December, and I mean, of course, people are taking their properties off December, relisting them
Mhm.
in January, and it was down 9.1 year. So I guess just the transition from December to January was
It was a big
the big.
one.
It was a big one.
It was a big one. I think that's bigger
And
than
then
anything else we saw.
yeah. And then median days on market, we're sitting at 42 days right now to sell the average condo, which is up 10.5% from last year which was 38 days. So about 4 extra days what we've seen over the year.
Yeah.
Heading into new listing volume, we are below last year's.
Yep.
Last year we were sitting at 668. We're at 607 on the new listing side. So we are still quite elevated here compared to many other years. And then heading into active listings, definitely different than what we're seeing for the freehold side.
Yeah.
We're making all time highs again. And what's crazy about this is last year we had quite the gap up from 2024 to 2025, and now we've gapped up even above the 2025 numbers. So if we're kind of following the same pattern as last year, we should rise into the May and June season,
Yeah.
and it's hard to say that we're probably gonna be above the 2025 numbers because we're just not seeing a catalyst just yet for people to
Mhm.
jump into the condo market and scoop these up. But they are going to get to a point where the price is going to make sense. And I
Yeah.
think is that the next chart. So the next chart, we're below 2021 numbers, and we're not far off from where 2020 started the year. So it'll be interesting to see this year as we go along. Are we going to drop below the 2020 number? Are we potentially going to follow it? Um, my guess is probably follow it. I mean, if you can get a condo from 2020 prices, it's not a terrible purchase at this time, especially when you
Yeah.
consider how much inflation has gone up, how many people's earnings have gone up during that time. The only problem that we're going to see when we're looking at the overall price is, a lot of those shoebox condos got made, and not a lot of people want those, and that's ultimately going to have an effect on the, your median condo price at the end of the day. Is if those are sitting longer and having to be dumped off at lower and lower prices, then that'll have an overall effect.
Yeah, and with the slowdown there, and really like elimination of the amount of foreign students we have coming into the city, there's less of a need for those rentals, which then impacts the investors that are holding them, and if they can even hold on to them, right? Or if they continue to flood that resale market.
Yep, yep. And then when we're looking at the months of inventory, we're not as high as we were in 2025 when we peaked out. We're just below that. I can't see exactly when we peaked out in 2025 for months of inventory. It looks probably mid-year, maybe May or June. So we do have some more months to go. I do suspect that if we keep this pace going, we will be in the eights for months of inventory, which will probably be the highest on record. It's definitely as high as it will be going back to 2011, but I don't think there'll be a time that was higher than eight.
Yeah, I mean, if we take a look back at active listings, and we say that we're going to kind of probably follow that same trend line as we go through the year. Like you said, we're likely going to hit that 8 months of worth of inventory. The only saving grace or hope that we have there, sorry, let me go back to sales volume, is if we start to see, oh, do we not have sales in there? Interesting.
Yeah,
We're missing a chart. Well, I'll tell you, it's down here somewhere, and it went pretty straight last year. So the difference will be if we start to see buyers coming back into the market and we see those sales tick up, we'll be able to turn this over. But like Matt's saying, it's looking like we're going to be on that same trajectory. Maybe around that May is when we peak out in terms of active listings. So yeah, we'll see how that goes. All right, let's talk about new market and come specifically into the freehold market. So we saw a very moderate decrease there in price. Matt, if you've got the cursor, if you don't mind changing that to a red for me, as our median price was down 1% month over month. A much bigger impact when we look at our year over year pricing for freeholds in Newmarket, pricing being down 18.8% when we compare year over year. So that is a big impact to our homeowners. And Matt, as we talked about median price kind of on the whole and just that gap that we're seeing between sales and what's sitting, is there are people out there that want to sell, need to sell, but their big challenge is their pricing is down so considerably that it's not easy for them to come down to where buyers are perceiving value right now in the market. And that's why we've started to like kind of continue to see this hefty decline there at 18.8%. Now, when we come over to transaction volume, we're down 5% month over month. Whoa, and thankfully, actually, shout out to Stacy Nixon. We talked about this in a chat. Newmarket did well year over year in terms of sales volume. We're up 19.4% when we take a look at that year over year. New listings are up quite a bit, especially over the prior month. That's just normal for December to January. We're actually down a little bit year over year, which is nice to see. Median days on market declined as well. In December, we were looking at 46 days on market. We have reduced to 29. Same time last year. Interesting enough, median days on market was 12. How about that for Newmarket in 2025? Termination volume is down this month, which makes sense for the month that we're in, but we are up 80% comparison to where we were last year. Right in the middle of what we'd expect to see for new listing activity in January. That's nice to see for Newmarket. Hopefully that'll help ease the uptick that we're seeing in active listings. Now, here we are. We're not setting a new high here. We are, hovering around our third highest with 180 active listings currently in the Newmarket freeholds. And we'll see if we continue to follow that trend line or where we go from there. It'll be interesting to see. It's funny enough that, when we take a look at active listings, last year wasn't the worst year that we saw for new market overall. Now, when we take a look at sales volume, here's what needs to change. We need to see a more traditional trend line of sales, buyers entering the market as we go through our winter months, and then kind of peaking out around that April and May is what we used to see. And it's been just all over the place the last 5 years. So it'll be interesting to see if we get this going. And really 2025, we just kind of saw this kind of ebb and flow where it didn't move too much. What we've talked about before there, Matt, is it's kind of needs based. There's people in the market that they have to move because life doesn't care what's going on with the economy, doesn't care what's going on with interest rates. We're moving. We got to move, right? Yeah, and that's why we saw much more of a horizontal line last year in comparison to previous years. Now, median price, we're hovering right at that 2021 number. We're really kind of holding on there. So we're now down to 975,000 for median freehold homes in Newmarket. And if we go back to 2021, that was 988,000. So we're not too far off of that sale price. I think the big question, Matt, is what's this line going to look like this year? Are we going to continue to see some fluctuations? It's looking like that based on our months of inventory, right? Months of inventory are dictating up here that we're still in a time frame where you'd start to see softening in prices more so than you'd see any stabilizing or increasing.
Yeah, I'm having mic issues here. Apparently, my mic is echoing quite bad, so I think you're going to have to carry it from here.
Okay, gotcha. No worries. We'll keep rolling through this. I'm glad somebody let you know, or if you heard it. And yeah, we'll just go from there. That's a shame. That's one of the reasons why we started a few minutes late today. Technology issues, always fun to deal with.
Yeah.
All right, well, let's keep going on. I'll carry for a bit. And then the great news is after this, Matt and I are recording a separate video, Matt, where you're taking a look at a lot of the economic indicators. And so we'll have the mic issue sorted out before that's done. All right, let's talk about Aurora Freehold. So as we come into here, we take a look at median price, specifically moving from December to January. We did see a continuing softening of down 4.5% on median price. Year over year, down 9.6%. So we still continued to see an adjustment there in our freeholds last year. Transaction volume being down month over month, only slightly when we look at the year over year numbers. So that's not bad to be only 4% off the pace in comparison to where we were last year. You know, I'll take that win for now. New listing volume up quite a bit when we look at month over month, and still up 14.5% when we look at year over year. So Matt and I have spoken at length about how January we came into almost 50% more listing inventory, active listings we were carrying in 2025 than 2024. And when that happened, even before the trade war talk began, we were like, hey, we're going to have a bit of an issue here because we're seeing so much active listing inventory stacking up. And we are still up 14.5% in comparison to where we were this time last year. Median days on market has increased month over month from 35 to 59. So we're looking at 59 days on market now in terms of our median. Termination volume up 15.8%, not too big, going from 38 to 44, and just up a little bit from last year where we were at 32 in terms of the terminations. When we're taking a look at that new listing volume, like I said, we weren't too far off the pace from what we saw last year. So we're much more in the mix than we have been previously, which is great to see in terms of our new listings. As we take a look at active listings, we're still very much on the high side. Matt, thankfully, we did not surpass some of our highs, which is great to see. And then as we move into our sales volume, here's the biggest challenge that we're seeing, which is why our months of inventory are stacking up. We're just not seeing enough sales. We're not seeing enough buyers come in, finding value or feeling comfortable yet in the market. So sellers, we really need to stand out. We have to get our pricing right, and we have to be thinking about the market of the moment more so than the markets of the past that we've been looking at. So I think that's a big message. When you start to see the sales volume down like it is, we have to make sure that we're being real sharp on our numbers. And how do we stand out? Because when we come over here, I'm going to skip this one. When we come over here to months of inventory, this is how much we're competing with, right? We saw our active listings was pretty high, sales volume pretty low. It's going to take a while to clear out all of this inventory, and we're sitting at 6.77 months worth of inventory, which is very comfortably into the buyer side of a market. When we come back and take a look at our median price, you can see we have dropped off from this time last year. We are now down to 1,180,000 compared to 1,306,000 previously. We are going to do another deep dive, Matt and I, specifically into the Newmarket, Aurora, and Georgina areas where we break down looking at just the detached and just the townhomes, because we are talking freeholds right now. So it can skew your specific numbers a little bit. It's still a great barometer for where we're at in the market, but we do want to narrow that down just a little bit more as we see that uptick. All right, rolling into Georgina and taking a look at the freehold. I was going to make a joke. Matt, chime in with some hand signals and let me know if there's any additional insight you want to share. But please, let's save everybody the echo if it is an issue. All right, taking a look at median price, not bad month over month. Actually, Matt, what I would say, if you don't mind, if you've got our spreadsheet open, if you can just tweak some of the colors there, because we did see an improvement in median price for freeholds in Georgina. We moved from 760,000 up to 800,000 when we take a look at the median price, and our year over year is pretty bang on. So this is one of the healthiest freehold markets that we're taking a look at so far today in terms of pricing. Transaction volume down 35% year over year. Interesting enough, down a bunch, month over month down 35.7%, year over year down 64.7%. So interesting to see that. We sold 51 units last year at that price, in Georgina, and it's really come down.
Just sitting at 18, that's quite the drop.
Yeah, and so it's a big drop, and it would be interesting to take a look at separately, Matt. We could take a look at the detached, the semis, and the towns, as we said we would for Georgina, and see how much that impacted the price, like where these sales were really made up between those types of homes, and did that truly impact our price holding so steady, or has Georgina just found value right now where buyers are coming into the market and purchasing, even if they're at lower volumes, but holding closer to that price point? All right, let's take a look at the graph so you guys can see a visual representation of this. As we take a look here into our new listings, you can see we're sitting on the high side of the clumping. We're at 114 new listings that came in January. What we are hoping to avoid is this huge glut that can happen in terms of everybody listing around the same time. And so we're sitting pretty high in terms of active listings. We are one off, Matt, from where we were this time last year in Georgina, specifically looking at our freehold market. Sales volume, it has found a spot all on its own down there. And like we talked about on that first page, dramatic decline in Georgina in terms of actual sales volume. So the number of homes that are selling, what that means for sellers, the competition that you have between the other homes in your neighborhood. You've got to stand out when you're looking at being one of the 4 that may sell that's available in your neighborhood right now. As we roll into median price, Matt, doing better than most, as we've seen in comparison to previous years. When we're taking a look at Newmarket and Aurora, we were well under 2021 pricing, still above our 2020, but we had come down quite a bit. We're not sitting in a bad spot here in comparison to previous years, and comparing to previous municipalities. We're sitting at a median price of 800,000. Like what we said, pretty bang on to where we were at in 2025, not far off from where we were in 2024, and up from our 2020 and even our 2021 numbers there. So good to see in terms of median price. Now here's something drastic. Look at that big increase we saw in months of inventory. And the reason why you're seeing such a dramatic shift here in months of inventory for Georgina is because of how much the sales volume fell off. Our active listings and our new listings are elevated, but not to the extent that you would see such a jump. This is solely happening right now because sales volume really came off in Georgina. So we're sitting at 11.44 months. If I was a buyer considering buying in Georgina, I would say right now would be a good window for you where you might find somebody that is truly in need of selling, and you might find a great deal there for you because they're feeling this pinch of like, hey, nothing is selling right now. And they can point and say like, hey, but what has sold at pretty good prices. So sellers, don't sell yourself short just because there's a lot of inventory. Some of your comps will be looking quite good, hopefully. But nonetheless, just a ton of inventory stacking up there. As we roll into the Simcoe market, we're going to talk about freeholds. And so as we look at median price holding pretty steady month over month as we move from December to January, up 0.4%, year over year down 6.7%. So not as drastic as some of the areas to the south, which is great to see, but nonetheless a decline as we look at our year over years. Transaction volume down 11.6% month over month, down 24.5% when we take a look at that year over year. So that's a pretty considerable drop off compared to the same time last year. And when we take a look at new listings, month over month, up a lot. But interesting enough, not that much. Like we're down in comparison to this time last year, but we also saw transaction volume fall off. So be interesting to see what our months of inventory does, if that's stabilizing a little bit or how that looks. Median days on market, we're currently sitting at 49 days on market for most homes. Taking a look at terminations, we're up just slightly on a month over month basis and up 13.9% compared to the same time last year. That's always interesting to see for January when we see terminations in January, especially going up. It's an interesting thing. And Matt, what we had talked about with no dramatic change coming in sight, we did argue that for those people that needed to sell and were still on the market in December, it almost made more sense for you to not pull off your home because so many other people were terminating in December. It was your time to be one of the few that was still available while everybody else canceled. And so I'm wondering if maybe now as we see an uptick comparison to year over year and even month over month, some of those guys are just at the end of their 90-day listing, or they're just like, hey, we got to cancel this thing. It didn't work over the holidays. Let's adjust our price and take a look. And interesting enough, month over month, we did see an uptick in what people were asking for their homes. Their median list price was up 3.1% compared from December to January, but down still last year as people have been correcting to where they see buyers seeing value in the market. When we take a look at what happened in Simcoe condo market, we are seeing month over month a continued decline there of 6%, down 8% in comparison to the previous year. Transaction volume down from December to January, moving from 46 to 40, quite considerably. Like, it's funny, Matt, as we're sitting here reviewing these and we talk about where we were last year, thinking, man, what a rough start to the year. And then you compare some of this transaction volume. I know we saw it for the Toronto board, but now we're getting into the nitty gritty of the different municipalities and regions, and you're down 44%. You know, I'd gladly take those 72 sales back in comparison to looking at 40 for what we have for the start of this year. Taking a look at new listings, big uptick month over month. Again, this is what we would expect the usual trend to be. Seeing this decline year over year, nice to see for them. As we take a look at median days on market, oh man, we're up to 61. That's the big number there. Don't worry about the percentage change. Just note that in the condo market, we're looking at 2 months to get this thing sold. And you got to remember that on the Toronto board, they're not great at tracking the overall property days on market. This is the listing days on market. So when you get your pricing right, you may still expect 61 days to move that condo. And I think that's very important. Like, you have to acknowledge at the beginning, a lot of time, we're not quite getting our pricing right. And even this median list price going month to month, this is more what you'd expect to see. We didn't see that on the freehold side of things, but we saw a continued decline as they're trying to get dialed in the condo market. So the list price came down 3% month over month, down 13.2% when we're looking year over year. All right, everybody, that is us for our market update today. I look forward to you joining us for our next video. Matt's microphone is going to be working. There will be no echo, and he is going to break down amazing policy and economic indicators that we've been watching. He's very thorough in that, so I urge you to check out our YouTube channel if you haven't already. That is where we post all of those videos, as this is normally something that we post on the KW page. So please check us out and subscribe. We look forward to hearing from you. I didn't see any additional comments come in today, but if there is a neighborhood or an area that you are curious about learning more about and watching that on the market update, please don't hesitate to reply with a comment or send us a DM separately. We would love to do that for you. So until then, I'm Dylan. That's Matthew Gizzie. We look forward to seeing you guys next time. Bye for now.